The US budget deficit is at an all-time high. It's quite literally in the trillions. We've seen unrest in some European countries because of an economic meltdown. Increasingly, economists are looking to the east for chances of future growth. South Africa will seriously have to up its game to stay in the mix.
Bright lights, big city, and a culture of spend, spend, spend. Americans have spent money far too freely and racked up massive debt. It's what sparked the 2008 recession. Nobel Prize-winning economist Michael Spence says major players didn't realize how risky it was.
They didn't see it and they didn't react defensively to it. And so the whole system built up to a point where it was ready to explode, and then it did.
Companies scrambled to survive and jobs were cut. Kobe Bowles, an aspiring actor who works in New York's financial sector, says his salary was slashed.
I was able to keep my job, but our hours were cut, things like that. You know, I had a sister who then, because of so much downsizing and so many enterprises, you know, she has 2 masters and couldn't find work of any kind. Everyone was dealing with something, you know, everyone.
The recession in the US had a domino effect around the world.
Global trade just fell off a cliff, and in multiple dimensions. You know, commodity prices came crashing down, you know, but trade literally just dropped 25–30%.
Many countries, including some in Africa, have bounced back. The US edged better, but its debt has ballooned. Strategist at Investec Asset Management, Michael Power, has been watching it closely.
It's a huge number, and let's start with the basics. We're at the level of $14 trillion at the moment. In the last 11 years, they've doubled debt in the United States. But that's just the small part of it. There are unfunded liabilities in Medicare, in retirement, that probably mean the true debt of the United States is something like 10 times that, at about 115 trillion US dollars.
After much political wrangling, the US Senate finally voted to raise its debt ceiling so that America could pay its bills and wouldn't be forced to default on its obligations. But the road ahead is going to be rocky.
Growth going forward is extraordinarily difficult to generate because the banks, by and large, are not willing to lend. They're still repairing their balance sheets. And the West, in particular, is stuck in a rut. And it can't get out of it at the moment because it's got no savings really to fall back on.
On the other side of the world, Greek workers have had enough. Their government has overspent horribly and the economy has been drowning in debt. Other EU countries have had to pay the price. The EU has poured 109 billion euros into a bailout for Greece. Spain and Italy are limping not far behind.
The European Union kind of failed in maintaining discipline of the type that's required to support a common currency. Now we have several countries that are at risk, that are being downgraded.
The financial markets are in a state of flux.
Well, money's rushing back and forth across the Atlantic depending on, you know, the mood of the market and which side they think is more risky on any particular day. I mean, it's sort of schizophrenic. It's almost hilarious.
With the markets awash, Japan is emerging from the shock of a tsunami and an earthquake. Many factories were wiped out, and the economy is battling to recover.
The Japanese economy was slowed down enough to disrupt global supply chains with ripple effects through the global economy.
Popular uprisings in North Africa have signaled economic change as well.
The good outcome is really quite good for governance, for young people, for growth in the region. But, you know, if it all goes badly, then it could be repressive regimes, you know, instability, political and other. I think it's so hard to know at this stage how it's going to come out. It's just like watching a play, sort of halfway through.
While there may still be uncertainty in the Mideast and North Africa, Spence outlines a distinct shift to the developing world in his book, The Next Convergence.
This is a crossroads in the global economy where the emerging markets are big, more self-sustaining, systemically important, and and a powerful force in determining what happens in the global economy.
Khalid Abdulla, the CEO of leading BEE investment holding company Sekunjalo, is very aware of the shift and is eager to take advantage of it. His company, which invests in everything from IT systems for hospitals to the marine industry, took some strain during the last recession. Its crayfish and abalone exports to the US were badly hit.
What we then saw is that we needed to make a phenomenal change internally with our business. For example, cutting debt. We did a complete back-to-basics thing, reducing unnecessary costs, cutting down on nice-to-have.
And they also looked east, to China.
China is a very hungry nation, and we're finding that the growth in that area is significant for us. We cannot sell fast enough to China, whatever products we have. If we could produce more or catch more, we could sell more.
China is seen as the new economic powerhouse, with India next in line.
China is, by 2020, going to overtake the United States to become the largest economy in the world. By 2030, it will be twice the size of the United States. And we shouldn't just focus on China, because India is rising too. By 2025, India's population will overtake China. By 2040, India will overtake the United States, and Citibank's latest forecast by 2050, India will overtake China. So it's a 1-2 punch that's coming out of Asia. And we need to be aware that how this shift is absolutely massive. It hasn't really happened since the early 1800s, when the United Kingdom knocked China off the perch of being the largest economy in the world. We're going back to 1820 now, when Asia was the center of economic gravity in the world, and we need to recognize that.
Our economists say South Africa needs to wake up and make the most of opportunities in Asia. South Africa's battling with low economic growth, the unemployment rate has just gone up again, and the rand is too strong. It's making exports and wages in dollar terms too expensive.
Wage rates in South Africa, believe it or not, are higher than those of Singapore, at least according to UBS. We are not competitive in the world that we are becoming part of.
COSATU's Western Cape Provincial Secretary, Tony Ehrenreich, has been unhappy with the strong rand for some time. An option would be for the government to buy up dollars and suppress the rand.
There's got to be clear and decisive measures to ensure that we have an equal chance with countries like China, who've pegged their own exchange rates to the dollars, which gives them a hell of an advantage.
But it goes beyond the rand. The latest strikes over wage increases have highlighted the power of unions in South Africa. That's good for worker power, but higher wages squeeze competition. With a double whammy of a strong rand and labor costs, other African countries are taking the gap.
Recently, GE decided to locate a medical imaging manufacturing plant, fairly sophisticated equipment, in Kenya rather than South Africa, because the wages there are 25% what they are here. So we have got to understand our competition isn't just in Asia. It's increasingly just north of the border from us in the rest of Africa.
But Ehrenreich says lower wages are not an option.
In South Africa, we've made a choice. We don't want to build a low-wage economy that's premised on exploitation of workers. We want to ensure that people have decent wages, that they participate in the economy, that they drive up demand for domestic products, and that in itself contributes to creating jobs, and that's what our focus must be.
Abdulla is thinking global. He plans to create more jobs here and expand his investments in South Africa. But he's also investing in several other African countries and abroad. Together with his chairman, Iqbal Survey, he constantly networks with foreign business leaders. He believes South African companies need to explore other avenues.
I don't think too many people are putting their hands up and saying, no, I want to take the next step now, I want to grow.
He believes that the growth could come from Africa as well as Asia.
The world wants to get into Africa. It's an opportunity for South Africa to extract that value for ourselves as well.
So what should South Africa be moving into to become more of a player? Agribusiness and tourism could be winners.
I hear that the Chinese recently voted Cape Town as the #1 tourist destination in the world for Chinese tourists. Coming to a beach near us somewhere here, 1 million Chinese tourists. I think that's a possibility.
And as debt crunches and markets tumble in Europe and America, some advice for the global economic future. Look to the East instead of the West.
We're better suited to the world that's arising than we were to the world that is leaving. We could do much better in the world that's coming than we have done in the world that's coming.
Next up, we'll look at consumer issues. We examine a smart device, or is it a smart way to part with your money?